Watching Tesla shares this morning down about 1% as the company cuts prices of the Model S and the Model X for the second time this year. Our next guest is buying some more after cutting back a day before the investor day. Tesla shareholder, future fund managing partner Gary Black joins us today. Gary, great to have you back.
Carl.
We haven't had a chance to discuss investor day and sort of that cloud of so-called disappointment that the market at least seemed to reflect. What did you think was at work then, and what do you make of the price cuts today?
I would say the more you watch the video on Investor Day, the more bullish you get. I think the market, it was definitely going to be a sell on the news event because the stock was up 100% in the 2 months before Investor Day. So obviously some people taking profits. And I'd say it was just, long on aspiration, short on tangibility. And I think, there were a lot of people that were playing the stock that were waiting for a big unveil of something. We didn't expect an unveil because, as you remember with Model Y, you don't want to get too far in front of an unveil because then you get, as we call an Osborne effect on the existing products, right? Everybody's going to wait for the new product. They're not going to buy the existing product. So no, we didn't expect an unveil, but I guess some people did. I think the positives from Investor Day, and again, watch the 4-hour video, including Q&A, you can't help but be bullish. They reiterated a target of 20 million deliveries by 2030. That would be 24% share of the market. They'd be by far the biggest auto manufacturer if they get. Now that's aspirational, but they gave you a roadmap of how to think about, and this is the second point, how they could cut costs by 50%, which allows them to go into the mass market, which is about 50% of the market. And they took you through looking at powertrain cuts, battery cuts, general assembly cuts. They announced that day that they were going to open up a new plant in Nuevo Leon, Mexico, where the labor costs are cheap, and they could take full advantage of the $7,500 IRA credit, and they could export into Brazil and other Latin American countries where Mexico has tariff treaties. So I came away extremely bullish. I felt that, the breadth, one of the concerns I've always had is, it's an Elon Musk company, but you saw there must have been 15, 18 people up on the stage that gave you a lot of confidence that there was a really broad, in-depth management team if Elon were to ever disappear, not that he's going anywhere. Other positives, Cybertruck is coming this year. Cybertruck's going to be huge. There's 1.3 million pre-orders. I think the street next year for 2024 is about 90,000. If they actually get this thing launched this year, which I think the confidence level should be high now. If they could do even 200,000 deliveries next year with Cybertruck, that's worth about 40 cents a share. And in the whole energy side business, nobody pays attention to it. They have this new facility that came on the third quarter in Lathrop, California. They can do about 10,000 megapacks per year. These things sell. They just raised price over the weekend. Again, there's a 2-year backlog. If they could sell even 10,000 of those at, let's call it $2.5 million each, which is what they go for, that's worth about another 50 cents a share. And so that's $1 a share more than the street is putting into their models today. And that's why we're still pretty bullish on the stock. And that's why we bought when the market, punished it after Investor Day.